Then got a protected area that you can assume we're going to go short from. Take a nice tight stop, hold your trades down to these lower areas of liquidity, these areas where we've got the first lows and things like that, and then come in and out nice and quickly. Good morning, everybody. So I'm going through a few questions lately from some of my guys in my Discord group, and I'm going to do a bit of a question series to talk about things that you want to understand a little bit clearer, really. So the question I got today, been posed by Kenix in my group, was at what time frame should supply and demand zones be created on? Now, I think this is a really key question. This is something that people often get lost in. You can end up with supply and demand zones all over your chart, and it can become a really, really confusing thing. So ultimately, the supply and demand zone is really dependent on your trading style. For example, if you're a higher time frame trader, then you want to be looking at, the hourly time frames, maybe the daily time frames. If you're a day trader like me, then you want to be looking at kind of 15-minute to an hour time frames for your supply and demand zones. But it's all relative, and they really appear all over the market. So I'm going to go through, I draw supply and demand zones, how they work for me. And then towards the end of the video, I'm going to show you a couple of tricks that are going to really make sure that these supply and demand zones are more valuable to you, that you can take better trades on them, and ultimately how to filter out the good supply zone and demand zones from the bad ones. So if we let's just take the replay tool back a few days, just get rid of some of this noise, okay? Just because I've got a few trades going on there, okay? So this is the daily time frame at the moment, and you can see it's relatively difficult to draw supply and demand zones on to the markets. I'm going to talk you through towards the end of the video how I think is best to draw the supply and demand zones. So for now, I'm just going to put them on the charts and we'll just go from there, okay? So you had a demand zone there, it raided liquidity that left. We had a little bit of reaction, but it didn't really do much, as you can see. I personally am not a huge fan of the daily supply and demand zones. The main reason being is when price gets to them, it moves quite slowly anyway, and it will usually give you some other sort of supply and demand zone that you can trade from on the lower time frame. So really with the daily time frame, I'm using this for liquidity areas. I'll mark on liquidity like that. And then when price gets to that liquidity area and has been swept, or let's say you were trading this one here, for example, okay, that there was a supply zone, wasn't it? Sorry, demand zone there, okay. I'm not looking at this whole daily area for trades. What I'm looking at ultimately is if that area is swept, okay, then I want to be buying from there. And as you can see, we had a good setup. Now, if I go back into that zone, just to illustrate this a little bit further, okay, if I drop down to the hourly time frame, you can see that when price has pushed up, created some breaks of structure there, and come down and swept that zone, in turn it's created, as you can see there, it's created its own supply and demand zone anyway. So that's why, like I said, that daily zone here, that daily zone is kind of irrelevant, because ultimately on the 1 hour time frame, we've had a much more tradable entry. And if you watched my video earlier in the week about engulfing patterns, you could have traded this really, really simply, taken a trade there, stop below the low with a bit of room, okay? Up to the first high, you got 3R out of that trade really, really easily. Okay, so nice engulfing pattern, as you can see here, and this is an hourly engulfing pattern. If you drop down to the lower time frame, you could have probably even got a tighter entry. Let's have a look. See if we can get down to maybe the 5 minute, if it gives the bars. Yeah. Okay, so what have you got here? You've now got a really nice entry here. So on the lower time frame, you've got another area here. So there's the supply there, sorry, the demand there. You've got the Frankfurt there. So what I'm looking for is, I'm looking for this area to be swept. Let's just make that a little bit bigger so you can see it easier. Okay, we're looking for this area to be swept. Get rid of that trade. That's swept. We also probably want to see Frankfurt being swept as well, because that's really commonly swept. And then you've got an engulfing here, which, as you can see, let's say you took it on the wick rejection pattern there. This is on the 5 minute time frame. Up to that first high. Where did we mark it on from before? Let's play it out. Let's go back up. That is our hourly time frame, isn't it? Yeah. So that first liquidity point up there, you've now got yourself comfortably into a 12-hour trade. So the supply and demand zone on the daily, just coming back to our original point, for me isn't really something that I'm that fussed about. What I'm looking for on the daily is I'm looking for areas of liquidity that are likely to be swept, like that area there, which was swept. We then had an hourly demand zone, and really I'm looking at the hourly zones as my main kind of trading zone. So to answer the question, which supply and demand zone timeframes, it is all relative. It's based upon you as a trader. But for me, the hourly zones and the 15-minute zones, that's what I'm looking for. You know, if I'd got down a little bit tighter into this, for example, okay, we can see that actually there is a demand zone there. Oh, not that one. If we get this, let's delete the bigger one. Okay, we've got a demand zone there, haven't we? So you could have traded off that, and that's obviously a much smaller area than we originally started off from. So using the daily time frame is really important, of course. If we see any of these daily swing points being swept, then we want to be paying attention to them. But then in terms of supply and demand zone, I'm going to be dropping down. I'm going to be dropping down to the lower time frames to find my zones. And you can see there, it's really clean down there, isn't it? Okay, really clean zone down there. We've got into our trade, lovely 12R to the first profits. And you know, you could have held this probably up to, see if we get even higher. See if we get up to there. Yeah, so look, you've got yourself a 23-hour trade just by narrowing your supply and demand zones down to the lower time frame. So if you're looking at supply and demand zone, the key important thing to notice is that supply and demand zone is, it's like I see it these days as a, how to word it, it's more of a beginner's plan. Okay, it's quite crude in its nature. It is effective. It's much more effective than pattern-based trading or trendline trading, that sort of thing. It has a lot more meaning to it, you know, understanding that supply and demand zones, that's where orders are created. But as you can see here, they often don't hold. And, you know, all of these supply and demand zones here, they've all blown. So I use them less and less these days. I like to use them when they have liquidity sat below. So that would have been a good zone, to be fair. And if we'd had a nice reaction off here, then we could have traded that. But ultimately, the supply and demand zones, you can see they do regularly fail. Instead, what I'm looking for these days, which has really kind of accelerated my trading, and this is something that I used to see as an invalid trade, is if the zone was swept. For me, I'm going to be looking at areas that are swept, and once we have the sweep of the zone, as you can see here, so that supply zone, ultimately it didn't hold, it was swept. But if we go down to the lower time frame, let's say we jump on the 15-minute, we sweep, we start breaking down. This is London, London Open. Okay, we sweep, we start breaking down, we create a new supply there. Okay, so we've got a new supply there. This is now on the 5-minute time frame. And instead of just trading this zone idly, which if you had done, you might have been stopped out anyway. Let's say you took the trade at 50% of the zone, which is what a lot of us do. And then you'd set your stop, even safely with a good, what's that? 5 pips above, you'd have been stopped out. So the higher time frame zones, whilst they're good areas, price moves slow enough that you can watch what happens in the areas. I wouldn't just be taking the zones and selling from them immediately, using things like my 3-2 technique to get into better quality trades, so waiting for a higher time frame zone to then give us a lower time frame setup. London here has opened, we've swept the zone, so we've now cleared out that liquidity. We've had a really nice impulsive move here, which has created a supply zone. And if we drop down further, if we can get the bars, so we've then tagged into that zone. Let's say you'd taken that trade there, you wouldn't have got 50% of the zone, admittedly. You could have had a nice safe stop there. Because the sweep has already happened, that now for me is a protected stop. I don't need to go really high with my stop. And what I can do then is I can hold down to my first liquidity point, which would have been first profits off there at like 1.7. Second profits off, I would have gone break even at that point. Second profits off there. Do we get access to it? Yeah. And then you've got out of that trade at 7.7R. So, you know, it's really simple. Just in this really quick session, ultimately what we made ourselves 30% on the account, but it's about waiting for the right zones to appear. Now, one of the really important things that you need to understand about supply and demand zones is that themselves will hold less often than they are swept. Okay, this is a big learning curve that I had to take. I was committed to supply and demand zones, and the one thing that I give you to take away from this session today is to understand that supply and demand zones will hold less than they are swept. And that doesn't mean it's invalidated. That actually benefits you, because when this zone is swept impulsively like this, and we want to see no more than 2 or 3 candles above the zone, okay? So if you zoom in, this is the 5-minute chart, okay? What have we got here? We've got a sweep, and then we've got 1 candle, and then a closing candle back in, and on maybe a 7-minute time frame, 10-minute time frame. Let's have a look. Oh no. Okay, on the 10-minute time frame, yeah. So there you've got your engulfing, and look at that. Again, if you haven't watched my engulfing pattern, the pattern-based video I did the other day, make sure you watch it, because it talks about these entries. Okay, you've got an engulfing pattern there. You could have got into that trade there really comfortably. The beauty of this is, I used to think that when supply and demand zones were swept, they were invalidated. So I would then ignore them. And I never really noticed the reason why price would then just reverse on you and be like, what? How have I missed this? But actually, if the supply zone or the demand zone is swept, that's a good thing. That means there's manipulation in the marketplace. And if there's manipulation in the marketplace, we know that there's big players in the marketplace, and we can then have a really comfortable trade with a protected stop. Okay, so what we can see here is that rather than having to play it safe and then do a really loose stop, which then eats into our trade by, half, okay, when we have these supply and demand zones swept, we can use this as a protected stop. This becomes a protected stop. You can tighten it up to there, and if we got in on this spike back into this zone, like I said, you'd have got yourself a lovely 7-8 hour trade out of that. And that was just to first and second liquidity points. As you can see, it kept on going. Let's see where it gets down to. You've got another demand zone here. So after those liquidity points have been taken, this is where now price is likely to start reversing. We're in premium pricing. We've started dropping. We've got 10R out. We've taken out our profits. We're happy we're at break even. You could have let the rest run down to there, and it would have hit that quite comfortably. Does it go any further down? Let's have a quick look. Probably not, because again, this is an area where we're looking for reversals from now. Let's see what happens ultimately. Does it come back to break even? We keep pushing down, and then we start to see that rejection. But what has price done here? Well, it's created liquidity, isn't it? Okay, this area here, this is a liquidity area. Okay, so for me, the supply and demand zones are less relevant these days. For me, it's all about liquidity. And yes, that is a new demand zone that's being created, but it's the sweep of the demand zone that I want to see, and then I'm getting into it. Okay, so rounding this up. Daily time frame, 4-hour time frame, I'm not particularly looking at supply and demand zones there. I might mark them on, I'll keep an eye on the areas, but ultimately I'm coming in and out of these trades quite quickly, so I'm looking at these as areas for reversal rather than trade from this zone. I'm going to be looking at supply and demand zones more closely on the 15-minute, 30-minute and the 1-hour time frame, but what I'm really looking for is a sweep of that zone. A really nice manipulation move up and down that takes out a high of that zone, clears out the orders and the stops that are sat above. Once that's happened, you've then got a protected area that you can assume we're going to go short from, take a nice tight stop, hold your trades down to these lower areas of liquidity, these areas where we've got the first lows and things like that, and then come in and out nice and quickly. And if you can see taking 12R out there and 23R out there, you can see in these trades we're taking out 30, 40 R in just a couple of days. It makes a really, really profitable trading setup. So look, I hope you enjoyed that. Let me know in the comments below how you are using your supply and demand zones, what time frames that you use. Do you wait for them to be swept, or do you trade them as is? And let me know how you get on with that. And as always, if you're not doing so already, please make sure you subscribe to the channel so you catch the next drop. Cheers.